Good afternoon, everyone. Thank you for your punctuality. I call this meeting to order. Before we proceed, I invite our company secretary, Ms. Tina, to confirm attendance and quorum.
Thank you, Dr. Jalani. I confirm that all attendees are present. We have the Chairman, Managing Director, 5 non-executive directors, General Manager, myself, and the external auditor from Deloitte PLT, Ms. Nuraliya. Hence, quorum is established.
Thank you, Ms. Tina. Before we proceed, let me remind everyone of a few online meeting protocols. As this is an online meeting, please keep your microphone mute when you are not speaking. For voting, we will use the raise hand feature. If you experience technical issues, please message Ms. Tina privately in the chat. With quorum confirmed, I declare this meeting open. The time is 2:30 p.m. First, we will approve the minutes of the last board meeting. I trust all members have reviewed them. Are there any amendments or corrections? If there are no objections, may I have a proposer and a seconder to approve the minutes as presented?
I propose the minutes of the last meeting be approved as presented.
I second the proposal.
Thank you. The minutes are approved. Let me briefly outline today's agenda. We have 5 items. First, the AGM ordinary business. Second, the financial impact of the Iran war crisis and proposed mitigation. Third, a proposal to convert our company status from public to private. Fourth, a proposed share buyback. And fifth, a clarification from our external auditor on audit exemption for private companies. Let us begin with agenda 2.
Thank you, Chairman. Agenda 2 tables the ordinary business matters for our forthcoming 80th annual general meeting. The board is required to review and approve the statutory item before the AGM notice and accompanying documents are circulated to shareholders. There are 5 key items. First, to receive the audited financial statement for the financial year ended 31st December 2025, together with the directors' reports and auditors' report. Deloitte PLT has issued an qualified clean opinion based on our auditor's report. Second, the re-election of directors. Under Article 107, Mr. Yogandra Anak Ramaya, Madam Lin Suiso and Encik Rohan bin Abdullah, being the director longest in office since their last re-elections, retire by rotation and offer themselves for re-election. Third, under Article 100, Encik Aliman bin Mazlan, who was appointed during the year to fill a casual vacancy, also retires at the AGM and seeks re-election. Fourth, approval of director fees and benefits of up to RM500,000 payable from the conclusion of the AGM until the next AGM, pursuant to Section 230 of the Companies Act 2016. Fifth, the reappointment of Deloitte PLT as external auditor for the financial year ending 31st December 2026, with authority for the directors to fix their remuneration. The full AGM compilation is attached as Appendix A through F. Management recommends board approval of all ordinary business items.
Thank you, Ms. Tina. The floor is open for question.
Thank you, Chairman. Ms. Tina, on the director's fees of 500,000. Given the margin compression we are experiencing from the Iran crisis, is this amount consistent with last year? And have we considered a temporary reduction to demonstrate good governance to shareholders?
A fair question, Mr. Yogandran. The amount is consistent with the previous year. Management view is that retaining experienced director during this volatile period is critical. However, your point on a temporary reduction is noted. The fee is the ceiling. Actual payment is prorated based on attendance. If the board wishes, we could add a note in the AGM circular explaining the rationale.
Okay, I have a question on the auditor report. The unqualified opinion means no material misstatement. but that is also confirmed. There is no going concern issue. Given the 35% cost increase, I want to be certain.
Okay, the qualified opinion confirms the financial statements represent a true and fair view. The auditors have not listed a material uncertainty related to going concern. The margin compression affects profitability but not the company's ability to continue as a going concern.
Thank you. Are there any other questions? If not, may I have a proposal for the resolution to approve the AGM documents?
I propose that the draft notice of the 18th annual general meeting, proxy form, the annual report for the financial year ended 31st December 2015 as table be approved for circulation to shareholders in accordance with the Companies Act 2016. I further propose that the company secretary be authorized to take all necessary steps to convene the AGM.
I second the proposal.
Thank you. All in favor, please click the raise hand button now. Okay, any objections? The motion is carried unanimously. Agenda 2 is concluded. We now move to Agenda 3. I invite our General Manager, Madam Farzana, to present.
Thank you, Chairman. So as most of you are already aware, so Iran is one of the world's biggest suppliers of urea and natural gas feedstock, both of which are essential for our fertilizer production. With the conflict escalating over there, we've been seeing serious disruption to global supply chain, and unfortunately, Rnfb has not been spared from that. In terms of numbers, our raw material cost went up for about 35% compared to last year. Now our revenue did grow up 12% to RM 85.2 million, which is good news. But the problem is our gross profit margin dropped from 30% down to 26.8%. So that drop is coming from higher raw material prices, increased shipping and insurance costs, and the ringgit weakening against the US dollar. So basically, what are we doing about it now? So management is proposing about 4 strategies. First, we want to diversify our supplier by moving away from the Middle East and source more from Southeast Asia and China. Second, increasing local sourcing from Malaysia suppliers where possible, which it will cut out the freight costs and reduce our forex exposure. Third, we are tightening cost control by freezing non-essential capex and optimizing our factory energy usage. So we don't have to pass the cost on to farmers yet. And fourth, we want to accelerate our organic fertilizer line using local agriculture waste, which reduce our dependence on imported chemicals. So we are recommending the board note these briefings and endorse this 4 strategy. And right now, I'm happy to take any question.
Okay, thank you, Madam Farzana. Now the floor is open for questions.
So thank you, Chairman, Madam Farzana, on the 4th strategy, expanding organic fertilizer lines. What is the timeline for acceleration, and what is the estimated capex required? I want to understand if this is a quick fix or longer term pivot.
Good question, Mr. Yogandran. So basically, this is not a quick fix. It's more to a medium-term pivot. We are looking at a pilot production run within 6 months, and the initial capex is around RM 1.2 million for the processing equipment, but we are planning to offset that with the freeze on non-essential conventional capex I mentioned earlier. So I can table the detailed feasibility study at the next board meeting if that would be helpful.
Okay, thank you, Chairman. Madam Farzana, you mentioned not rising prices to farmers. How long can we sustain that? 3.2 percentage point margin drop is significant. If costs continue to rise, at what point do we pass some of the increase?
That's actually a critical point, Ms. Anita, and honestly, it's something that we are watching very closely. Our assessment right now is that we can hold off on price increases for another 2 quarters using the cost control measure we have in place. But if that crisis drag on beyond that, we are probably looking at the modest price adjustment somewhere in the range of 5% to 8%, and we are monitoring the situation weekly, and if things worsen early than what we expected, we will bring a recommendation to the board before it becomes urgent.
Madam Farzana, on the diversification to the Southeast Asian suppliers, have we identified specific alternative suppliers? And what is the price differential compared to Iranian source?
Yes, we have done the groundwork on this already. We have identified 2 potential suppliers in Indonesia and one in Vietnam. Their pricing is roughly 15% higher than what we are getting from Iranian sources pre-crisis, but that's still about 10% lower than current Middle East spot prices. And right now we are in the final stage of due diligence, right? And we are hoping to sign trial contract within the next 4 weeks.
So, if costs are 50% higher and we are holding off on price increase to farmers for 2 quarters, what is our revised break-even point? And I want thus updated cash flow projection on my desk shortly.
Understood, Madam Lim. Our preliminary break-even analysis suggests that we are still slightly above the water due to our recent 12 revenue growth. But you are correct, the margin for error is rather thin right now. I will finalize the exact revised break-even point and circulate the updated cash flow projection to the entire board by Monday morning.
Okay, thank you. Are there any further questions? If not, I call for a resolution. May I have a proposal?
I propose that the board notes the briefing on the financial impact of the Iran war crisis and endorses the mitigation strategies proposed by management, and that management continue to monitor the situation and report developments to the board at subsequent meetings.
I second the proposal.
Okay, all in favor? Please click the raise hand button now. Okay, carried. Agenda 3 is concluded. Now we move to Agenda 4. This is a significant strategic proposal. I invite our Managing Director, Encik Suhaili, to present the rationale.
Thank you, Chairman. This paper seeks the board consideration of a proposal to convert Rnfb from a public company to a private company. There are three main rationales. First, cost efficiency. Public companies bear higher costs for mandatory AGMs, extensive public reporting and compliance. As a private company, we would not be required to hold an AGM under Section 340
of the Companies Act 2016 and could pass certain matter by written resolution. Second, operational flexibility. A private company structure allows faster decision-making without the 21-day notice period required to convene public shareholders, enabling quicker responses to market changes. Third, reduce public scrutiny. Our financial position during the crisis would be less exposed to competitors and the general public. However, there are disadvantages. Capitalizing would be limited, with prohibition on inviting public subscription. Membership would be capped at 50 shareholders. Conversion would require delisting from Bursa Malaysia, with implication for liquidity. And as confirmed in Agenda 6, conversion does not exempt us from audit. Management recommendation, given the significant implication, is to defer any decision. We will conduct a detailed feasibility study and present a comprehensive report to the board, after which the matter may be tabled at a future AGM.
Thank you, Suhaili. I now open the floor for debate. Mr. Yogendran, how about your views?
So thank you, Chairman. I have serious governance concerns. The third rationally says reduced public scrutiny. I interpret that as reduced transparency. During a crisis, shareholders deserve more visibility, not less. Also, the loss of listing on Bursa would hurt our existing shareholders. What is the exit path? Many invested expecting a liquid market. On the cost argument, as Agenda 6 confirms, we would still require an audit. We would lose the AGM but gain no audit fee savings. The 500,000 directors fees we just approved, that's a fraction of our compliance cost. I am strongly opposed to proceeding with this conversion at this time.
I agree with Mr. Yogendran. The timing is wrong. We are in the middle of a supply crisis. Adding a complex legal conversion and delisting process will distract management. Also, the 50-member cap is problematic. We have more than 50 shareholders today, so conversion would force some to divest. So that is not fair to long-term investor.
I can see both sides. The cost savings are real, but the government threats off are significant. I think I support the management recommendation to defer for further analysis and let us get a full feasibility study regarding the tax implication and an analysis of shareholder sentiments before making a decision.
I support the deferral, but management should not have wasted time drafting this conversion proposal while we are in the middle of a supply chain crisis. But this indefinitely until our margins recover.
Just to clarify, I'm not pushing for immediate conversion. My own recommendation is to defer. I simply presented the proposal I requested. The consensus clearly favor deferral.
Okay, thank you all. The consensus is clear. Ms. Tina, please record the resolution.
Noted, Chairman.
Okay, now I call for a formal resolution. May I have a proposal?
I propose that the proposal to convert the company status from a public company to a private company be deferred, pending further an analysis by management, and that the matter be tabled at a future extraordinary general meeting at an appropriate time.
I second the proposal.
Okay, all in favor, please click the raise hand button now. Okay, carried. Agenda 4 is concluded. Now, Agenda 5, Encik Suhaili, on the share buyback proposal.
Thank you, Chairman. This paper outlines a proposal to undertake a share buyback of up to 1.5 million of our own issue ordinary shares. Total issue share are 25 million, so 1.5 million represent 6%, which is within the legal 10% limit under Section 127 of the Companies Act 2016. The objectives are threefold. First, enhancement of earning per share. Buying back shares reduce the number in issue, increasing EPS for remaining shareholders. Second, market stabilization and confidence. The geopolitical tension have caused our share price to be undervalued. A buyback signals board confident and may establish a price floor. Third, efficient capital utilization. Deploying cash into undervalued share may yield a better return than leaving surplus fund idle. However, the board paper also notes that the Iran war crisis has placed pressure on cash flow and working capital. The buyback would need to be funded from retained earnings, and the board must be satisfied the company will remain solvent afterwards. Management recommendation, in view of the current cash flow position, is to defer the proposed share buyback for further evaluation of liquidity and market conditions.
Thank you, Encik Suhaili. Miss Anita, you had a question on cash position?
Yes, Chairman. Encik Suhaili, what is our current cash balance and working capital ratio? If we spend, let's say, 80 cents per share, the buyback will cost 1.2 million ringgit, right? So can we afford that and still pay supplier for the more expensive raw material we discussed in Agenda 3?
An excellent question. Our cash and bank balances stood at 3.15 million at year-end. Although our current ratio is healthy at around 3.2 times, a 1.2 million buyback would consume close to 40% of our cash reserve. With raw material costs up 35% and cash flow already under pressure, that would leave too thin a buffer for operational shocks. That is precisely why management recommend deferral.
I support deferral. A buyback is a luxury we cannot afford now. Let us stabilize operations first. The mitigation strategies from Agenda 3 need time to work. We should revisit this in 6 months, not now.
I agree also. We should consider that a buyback reduce our retained earnings, which could affect our ability to secure bank financing if needed. Preserving liquidity is the priority.
Thank you. Without further debate, I call for a resolution. May I have a proposal?
I propose that the proposed share buyback of up to 1.5 million ordinary shares to be deferred to a future extraordinary general meeting, having regard to the current cash flow position of the company arising from the ongoing impact of the Iran war crisis.
I'll second that.
All in favor, please click the raise hand button now. Carried. Agenda 5 is concluded. Finally, Agenda 6. This is for information and noting. Now I invite Ms. Nuraliya from Deloitte PLT to provide her clarification.
Thank you, Chairman. This clarification is in connection with the proposed conversion discussed in Agenda 4 under Section 267 Subsection 2 of the Companies Act 2016, read together with the Companies Commission of Malaysia's Practice Directive Number 3 of 2017. The Registrar may exempt certain categories of private companies from the audit requirement. There are only 3 qualifying categories. First is dormant company. Companies dormant since incorporation or throughout the current and immediate preceding financial year. Second, zero revenue companies, which is no revenue in the current and past 2 financial years, and total assets not exceeding 300,000 ringgit. Third, threshold qualified companies, which is revenue not exceeding 100,000 ringgit, total assets not exceeding 300,000 ringgit and not more than 5 employees in the current and immediate past 2 financial years. Now, let me assess Rnfb against these categories. For the financial year ended 31st December 2025, the company recorded revenue of 85.2 million ringgit and total asset of 62.15 million ringgit. The company is clearly active and has well above 5 employees. Therefore, Rnfb does not qualify for audit exemption under any of the 3 categories. The key implication is this: even if the company were to convert to a private company, it would still be legally required to have its financial statements audited. Conversion would produce no savings in audit fees, contrary to one of the rationales raised in Agenda 4. That is my clarification.
Okay, thank you, Ms. Alia. This is critical information that directly impacts the rationale for Agenda 4. Are there any questions for the auditor?
Just one clarification, Ms. Leah. Is there any possibility of the registrar granting discretionary exemption beyond these 3 categories?
No, Mr. Yogendran. The practice directive is exhaustive. The registrar has no discretion to exempt companies outside these 3 categories. If you do not meet the criteria, you must be audited. There is no grey area.
Okay, thank you. The board notes this clarification. May I have a resolution?
I propose that the board notes the clarification provided by the external auditor on the qualifying criteria for audit exemption under Practice Directive number 3 of 2017 and confirm that the company does not qualify for audit exemption under any of the 3 categories, regardless of any future change in the company corporate status.
Okay, all in favor, please click the raise hand button now. Okay, carried. Agenda 6 is concluded. So, thank you all. Let me summarize today's decisions. On Agenda 2, we approve the AGM documents and ordinary business items for circulation to shareholders. On Agenda 3, we note that the briefing on the Iran war crisis and endorse the 4 mitigation strategies proposed by management. On Agenda 4, we deferred the proposal to convert from a public to a private company, pending further analysis by management to be tabled at a future EGM. On Agenda 5, we deferred the proposed share buyback of up to 1,500,000 ordinary shares, having regard to the current cash flow position. On Agenda 6, we note that the auditor's clarification and confirm that Rnfb does not qualify for audit exemption under any category. Ms. Alia, thank you for your time. You may now be excused.
Thank you, Chairman. Good day to the board.
Okay, Ms. Tinea, please ensure the minutes of these meetings are circulated within 14 days. Also, for Agenda 3, please schedule a follow-up from management on the organic fertilizer feasibility study at the next board meeting.
Noted, Chairman. I will record all resolution and action items accordingly.
Okay, are there any other matters to discuss? If not, I declare this board meeting adjourned. The time is now 3:55 p.m. Thank you all for your valuable contributions.